Hi everyone, let's jump straight in. There has been obviously a lot of geopolitical tension. They are really leading markets at the moment. From Friday, when we saw Israel and Iran step up their attacks, they've obviously continued with that. But today, we've seen some really interesting dynamics. So let's just jump in straight to the charts. Now, this is a Brent crude oil chart. And what we're looking at here is on the right-hand side, so where I've got the pointer. Essentially, we are above that 200-day moving average. We're above all the moving averages. So very bullish setup for the oil price right now. But if we look at the very last candle, that's today's price action. So we have been as low as 73, and then as we've moved $2 today. Now we haven't got as high as we did on Friday or on Monday. So we're not quite at that $80 per barrel level yet, but it does look like we are grinding higher on the oil price here. Now, this is a Brent crude chart, as I mentioned, and the reason being is that Donald Trump left the G7 earlier than expected, early this morning, and since then, he has come out and said that he's had no direct contact with Iran, but that Washington is getting ready. Well, what are they getting ready for? Potentially for supporting Israel against Iran, and that has caused a bit of a spook in this. That's really spooked commodity investors and investors more generally. Let's take a look at price action in the commodity space. So Brent crude up $1.8 or $1.80 today. So that's up nearly 2.5%. We've also got gas oil that's up 5%. So be a lot of green space. If you follow my pointer here, you'll see a lot of green numbers. They're just moving higher. Nat gas up 3%. The heating oil up nearly 3% as well. So a lot of upside pressure on energy prices on the back of that expectation that maybe the US will go in and support Israel against Iran. Maybe this will escalate even further. If we look at gold now, gold's fairly stable actually, really flat. Now, it hasn't moved with the oil price today. That's always something to note, I think. Partly it's because we're already at 3,387 per ounce in gold. So maybe the upside is already priced in, but it could be just getting primed and ready to go if we do see a big escalation in the next few hours or overnight. So the other thing that's worth noting, these are bond yields. Bond yields have been up and down today. There's been a lot of volatility in the bond market. Now, what we see, bond yields move inverse to price. So when yields are falling on the 10-year US Treasury, you know that the price is going up. So the price has gone up. The yield is down nearly 2 basis points. So it's not a huge move, but it does suggest that we're moving towards a risk-off environment. And then this is the VIX index. I'm just going to show it to you now. The VIX index has been really interesting. So if you look at this big spike higher to above 40, that came after the reciprocal tariffs day. This spike here on the very right-hand side of the screen, as you can see, as I'm circling with the pointer here, that was the Iran-Israel conflict. Now, not that long ago, if you had said Iran and Israel, they're going to actually launch a prolonged attack against each other, we don't know what the outcome of this is going to be, you'd have probably thought that that the VIX would spike higher. Now, the VIX is the volatility index that measures the Wall Street fear gauge or measures volatility in the S&P 500, but it's really remained, it has spiked, it is above the average level. It's currently trading at above 19.5. The average for the year is 18.87. So it is slightly above average. That means prices are moving, stock prices are moving higher than expected. Now let's take a look at what those equities are doing. So it's a bit of a sea of red there, but not massive moves on the downside. The 5-day chart as well, look where I'm circling right on the right-hand side of that chart. That shows very moderate losses, very mild losses for the two main US indices. And again, European indices, they're also falling. Now, I just wanted to show you what's been really moving the S&P 500 over the last 5 days as we've had to price in this Middle East tension. So Oracle, top performer, up 20%. That is an earnings story. So that is not linked to geopolitical tension. We've also got some companies, Halliburton, for example, that's up 7%. So that is an arms manufacturer in the US, so a big defense firm. So you would expect that. We've got some energy companies in there as well. So by and large, not massive moves. What's on the downside? Well, an energy company, that's quite interesting, although that's very unrelated to what's going on here. United Airlines, so airlines, Southwest Airlines, they are coming under a lot of pressure. Airlines are coming under pressure because jet fuel is rising. So when you've got elevated oil prices, that impacts airlines. Now, if we go back to this Brent crude oil chart, yes, oil it's elevated for, the last few months for sure. We thought, we had been as low as below 60 at one point. That seems like a long time ago now. Now we are trading above that 75 handle there, but we're still not at the highs of the year. That comes in above 80, so about $83. So we're kind of retracing it. It looks like a bullish pattern to me, so we could continue to grind higher as this crisis plays out. So just one thing to note about this crisis, it's not like the volatility that we saw after the reciprocal tariffs, after Trump's liberation day. It's not like that, where prices were literally moving kind of, 10, 15, 20% in a day. It's more, it's just a bit of a slow grind. So yes, prices are moving, but not as much as we saw in April, but still a 2% daily move, 2.5% daily move in crude. Back to this, look at the pointer here, up 2.53% now. That is a big move, and that is worth pointing out. Also, oil prices now back in the green for year to date. In the last 5 days, let's just see how much it has gone up. Bear with us here, 12%. So there's been a big move in oil and another 2.5% move today. That does suggest, and we're not even near the highs of the year so far, so there could be more upside to come, depending on the escalation. And I will just leave you with this note about just this screen on equities. So this is global equities, as you can see, sea of red, but moderate decline so far. However, volatility is picking up. We would expect that we could potentially see kind of a grind lower in stocks, a grind higher in the oil price, as the market is still digesting and absorbing what's going on in the Middle East. Very, very sensitive to headline risk, particularly the oil price there. So something that we'll be following, and do follow us for more. So thanks so much for joining, everyone. Take care.